aren't shopping quite as much as expected for those distressed bank assets. Are you finding them any more appealing than you did, say, 6 months ago?
Well, as you know, we did buy Bank United back in May from the FDIC, and we're quite happy with the way that that is working out. The new management team that's been put in has really gotten hold of things, is improving both the cost structure on the deposit side and putting money out in the lending side. So we feel that that one foray that we have made is working quite well.
Do you want to be a consolidator, though, Wilbur? Do you see an opportunity to buy some other assets, say, from the FDIC or perhaps elsewhere in the industry? There's so much stress in commercial real estate.
Yes, well, we were part of the group with Starwood that acquired the Chorus assets from the FDIC. And again, we're quite happy. It's early days, and that's a multi-year workout. But we're quite happy with the early progress that's being made there. It seems to be the case that even in markets that have been as bombed out as, say, Miami, at a level, apartments will sell. Now, it may be that the level is $200,000 instead of the original price of $600,000, but at least they're selling. And I think that's a good sign because it means that eventually we'll clear out the overhang. But we're a long ways from solving the housing problem and the mortgage problem.
Wilbur,
go ahead.
Sorry, I didn't mean to cut you off, but I just kind of want to get back to this idea of Bank United, as you mentioned earlier. Do you think regulators are becoming more consistent with what they are willing to let PE firms do in the banking group?
Well, since our deal on Bank United, I don't believe there has been another private equity transaction. So
IndyMac, though, known as One West, of course, allowed to buy a failed bank. I mean, is that a sign of things to come?
That preceded our transaction. The IndyMac deal was back around March. Our deal was in May. As far as I know, there has not been a private equity deal to buy a failed bank since then. I think the FDIC still is concerned about the idea of private equity buying banks. Back in July, when they finalized the new rules, they had indicated that 6 months later they would have a review. And we're hoping that there really will be a formal process to review things so that they can reconsider, do they really need to extract a higher amount of capital from a private equity-backed bank than from one that's just owned by the public.
Wilbur, I want to jump in and ask you a quick question, though, about GMAC, because there is some talk that GMAC may sell its mortgage servicing business to Warren Buffett. And I want to know, given your knowledge of mortgage servicing, whether you're willing to bid against Warren for that business.
Well, we, as you know, don't really announce what we're about to bid on, but we are the largest independent servicer of non-prime mortgages through American Home Mortgage. It services around $100 billion worth of mortgages on some 500,000 homes. And so anytime a large servicing platform comes up, it's logical to think we'll at least look at it.
Wilbur, I know we're jumping around a little bit from mortgages to autos. You said maybe there should be a second cash for clunkers program. Should we be concerned that you're saying that? Do you think the auto industry is that weak?
It isn't so much that. I believe that car sales will go up perhaps 1.5 million units from last year, but these are very, very depressed levels. The United States in a normal year scraps between 12.5 million and 13.2 million cars, and then family formation growth generally adds another million unit demand.
Okay.
Well, we're only going to be at, say, 11.5 million units next year.
Okay.
And we were less last year.
We have to leave it there, Mr. Ross.